standard of living. Standard of living can be referred to as the level of wealth, stability, comfort, and overall quality of life available to someone in a particular area. The Gini coefficient is a number that tries to represent the level of income inequality in a country, 0 being no income inequality, 1 being total income inequality. The Gini coefficient is effective in determining a country's standard of living. What are the causes and effects of income inequality? One effect of income inequality is recession. In the words of Peter Cohan, rising income inequality is a good predictor of a recession. In the article, Peter talks about how envy of the top 1% makes the bottom 99% make risky financial decisions that will be bad for them in the future. For example, before the 2008 housing market crash, the lower and middle class had a fear of missing out of the supposedly booming real estate market. They would take predatory loans from the bank from banks that they could never pay back. To make it worse, banks bought subprime mortgage backed securities. Basically a bet that they would pay it off unsurprisingly. When most of the country defaulted their mortgage payments, it caused the value of the securities to plummet, therefore crashing their economy. Another cause of income inequality is tax cuts for the rich. 82.8% of the 2017 Trump tax cuts will go to the top 1% of earners in the next 5 years so that they will make the wealth gap wider and furthermore increase income inequality. How does income inequality impact the standard of living? Income inequality could cause the degree of inflation or a recession that in turn decreases economic stability and increases unemployment. With the decreased labor force, especially in the lower class, rates of material goods go down. Overall, the satisfaction and quality of life go down when there is a high income inequality. What measures of standard of living did you choose? How are the measures calculated? This is what factors do they include? The measures I chose to measure standard of living is the Gini coefficient. To find the value, you first must look at the Lorenz curve of a country, which is a graphical representation of distribution of wealth. Then you take the area above the curve and divide it by the area above the curve plus the area below the curve. There are 3 factors at play here. The perfect equality line, which is a 45-degree line with a positive slope starting at 0. The feasible equality, which is what is referred to as the Lorenz curve, and the actual wealth distribution curve of a country. The area above the Lorenz curve is just the space above it until it reaches the perfect equality line. The area below the Lorenz curve is just the space below it until it reaches the actual wealth distribution curve of a country. The above area divided by the area of the 2 added up is the Gini coefficient. What are the advantages and disadvantages of the measure? Some pros of the Gini coefficient is that the number ranging from 0 to 1, so it is easy to make conclusions based off of it. It is better than using the GDP per capita because it represents more of the population. Some disadvantages of using the Gini coefficient are that it depends on how the data was sampled. Sampling bias and other factors could contribute to inconsistencies with the data. It just measures income inequality, which is a factor that can contribute to the decreased quality of life. However, it does not necessarily mean that there is a causation. Also, different classes of people need different levels of income to subsist and be happy. For example, $100,000 to someone in rural Oklahoma is a lot of money, but for someone trying to get by in New York City, it is rather small. This is a factor of the Gini coefficient does not and cannot consider based on its nature.